It is Wednesday, time for Mike on the Money, and we're talking about some powerful gifts that you can give yourself. A lot of people are going to like this, Mike, because we're talking about tax-saving gifts.
Everybody's going to like this.
Yes. Well, everybody's going to like this because you are here giving us some great advice once more. So tell us, the market, of course, downturn has been no fun for anyone this year. Are there any ways we can use it to our advantage?
Yes. Yeah, we're talking tax-saving things, and so the obvious caveat is that everybody has a different tax situation, so talk with your tax professional to make sure you know what types of moves make most sense for you. But the biggest one is called tax loss harvesting. Basically, all you're trying to do is take any kind of assets like stocks where you've had big gains on them, match them with stocks where you might be down. You can blend the two things out. It helps you reposition your portfolio without having to take on any taxes. This is important in non-retirement type accounts.
Tax loss harvesting.
Tax loss harvesting.
Okay. Now, you say changing the tax treatment on some of your assets makes sense as well. Can you explain that?
Right. Now, this is going to pertain to your retirement account. So like your traditional IRAs, your 401ks, the government gives you a tax break when you put the money into them, and then they take the taxes out whenever you take the money out in retirement. Conversely, Roth IRAs, you get no tax breaks on the front end, but you take all of the money out tax-free. So when the market's down like it is, this is a good time to sometimes convert some of that money that you've already gotten the tax breaks on into money that you'll never pay taxes on in the future. So you can kind of let those assets float up. Now, the whole key here is that you're going to pay taxes today in order for all of that massive tax break in the future. So you need to make sure you have the money to pay those taxes.
All right, good tips there.
Absolutely.
Finally, end of the year, people are maybe feeling generous. So what about gifting and charitable donations?
Yeah, a lot of times people, especially if you're worried about estate taxes, people will gift money to their kids, their grandkids, really anyone, with cash. But you can also gift them stocks, and especially with stocks as depressed as they have been this year, this might be a good time to get it out of your estate and to your kids, your grandkids, and let that money kind of float up for them, and you can take advantage of some taxes there. In terms of charitable donations, a couple of years ago we changed the tax code, and all of a sudden now you can't really write off a lot of the charitable donations because most people file with a standard deduction. And so what you can do is you can kind of jam a couple of years worth of your charitable donations together this year maybe, and that kind of smooths things out for you.
All right, great advice there.
You bet.
Mike Giordano.
We unpacked a lot right there.
We
so they may need to go to WYFF4.com to get a rewatch.
We are going to be putting that link up on our website. I'll put it on my Facebook page too, and Mike will as well, so you can recap that and get all the tips that you just shared. Mike Giordano, financial advisor with Williams Wealth Management. Thank you so much. Merry Christmas.
Merry Christmas to you.
Thank you. We'll be right back.